Okay, we are live. We are live. Let me put this out there. Hello, everybody. Welcome back to the Market Open. Richard, what's up? I am live and we are here. Aha, Damien, what's up? Lars, what's up? Your financial independence. What up, man? How are you guys? So, Uriel, what's up? Love the channel. Thank you, man. I appreciate it. Means a lot. Good morning. Everclear, Omar, UCUS. Good morning, everybody. It is Tuesday. Miss late night close. Have to wake up at 4 a.m. Late night was actually all about stocks. We were deep diving into ticker symbol DNA. So nothing that bad. Great bedhead. Look, Felicia, not everyone can have amazing cat hair like you. That's how I'm assuming your hair looks. It's like a cat. Gabe says he hates the channel. Okay, Gabe, if you agree with Gabe and you hate my channel, go follow Gabe's channel because Gabe just started a channel, GS Strategies LLC. So check him out. All right, the market. What do we have going on? Well, we've got Meta at 146. We've got a red market in the pre-market. We'll see how it goes into the green market. Now, there were some pretty strong analysts yesterday basically saying in Sweden, the internet just went in by 100 points. Oh, the interest, not the internet. Yeah, so there's some analysts saying that the market is, what do you call it, baking in 75 and that they're ready for a rally. A rally. Of course, a rally. And I want to play some of those videos and talk about that in a little bit. 5 minutes away from the market open. Red market. Oh, Kathy Wood sold 68,000 shares of Spotify yesterday. I don't know if this is a I'm getting rid of the position because she sold about 2.3 million back in June, July, and she kept around 700,000. So I don't know if she's like, okay, I'm gonna like start getting rid of the rest of it. I don't think that's what she's doing. I think that was like a swap, maybe. She bought another 900,000 shares of ticker symbol DNA, which is a very exciting ticker symbol to me. But she sold 68,000. Now she sold it out of the ARK W fund, not the ARK KK fund. Actually, I want to see how many shares she has left in that ARK W fund. Let me pull that up. Because that was a pretty weird sell, to be honest. She hasn't touched that position for months, and out of nowhere, she starts selling it. And again, this is the biggest problem I have with ARK is like just how they sell stuff like that. Question a bit. Do you know about Rumble? They de-SPAC'd Monday. Oh, they already SPAC'd the Rum? Yeah, I wouldn't buy Rumble personally. I don't see the crazy value proposition. They're up 40. Oh, they're down 5%. Yeah, they're up 40% because it's a SPAC. Look at this. They're they're at 79 on the RSIs. So from a basic technical indicator, I wouldn't buy it. Look, Rumble is conservative YouTube, and it's actually, if you look at the UI on your phone, the rate hike is today. No, it was tomorrow. I was just saying, what is the Fed going to do? You know, just theorizing about it. If you look at Rumble on your phone, the UI and on the internet, I mean, on the desktop, the UI is actually not that good. I mean, compared to most tech companies, the UI is so like for a company that has that many hundreds of millions of dollars, the user interface is really not that good. I think the reason they're going public is because they've tapped into a niche of people in the United States that do not like big tech companies and feel they are censoring. And so they've created the alternative, right? Andrew Tate, they've invited him on their platform. They have all the conservatives on there. So they are conservative YouTube. It's not a bad business at all. Peter Thiel invested in them as well. I don't know if that's a company you want to bet on. Like, what innovation is Rumble going to do? How are they going to change the face of media? Like, they're just a conservative YouTube. You know, they're just a place to go if you don't want to go to YouTube. So it's not that interesting. So she has 223,000 shares of Spotify. So she sold 68,000 yesterday. She sold about 1/4 of her position of Spotify yesterday from the ARK W fund. Interesting. The European rate hike is probably why we're down a little bit more red in the morning. Tesla to 307. Tesla still holding up. FedEx 161. AMD 76. S&P 385. Still doing better than yesterday. Yesterday, S&P was 382 to start the morning. Coinbase $70 or 69, 68. Pins 25. So yeah, Rumble is like Google at 101. Rumble's not an interesting company for me to buy. It's just like, I don't know, there's nothing really exciting. Bitcoin down below 19,000. This was teetering on 1819 yesterday. We haven't seen Bitcoin hit new lows. I guess Bitcoin is correlated to growth stocks. So if we see Bitcoin hit new lows, we're probably gonna see growth stocks hit new lows as well. If Ark and Kathy didn't show their daily moves, how drastically different do you think they would be viewed? Do you think it would be a benefit to stop? No, I think those daily moves are marketing for Ark. Like, I think they hacked the system. They figured out the way to get people to fall in love with Zoom and Roku is to keep buying it, and in turn make the market wonder, why does this fund keep buying it? I think actually that was their strategy. So US inflation is lower than most countries. Yeah, inflation in Turkey is like 80%. So inflation is not the best. All right, in 35 seconds, we are going to have the market officially open. I have my bell ready. For those that are wearing headphones, I would like this to be your warning. For those that are not up yet, but that want to wake up, I think this will do the trick. It is Tuesday. We are second day in the week. You can't say you're tired of the week yet. You got to get to at least Wednesday to say you're tired of the week. We're in the week. We got to keep it going. We got to keep hustling. We're alive. We're human beings. We have to make the most out of every day. And on September 20th, 2022 at 9:30 a.m., the United States stock market is open. Wake your ass up. The stock market is open. Zoom 77, ARK 42, Palantir 780, down about 0.64%. Coinbase 2.76% down about 68. CleanSpark did an interview with their executive chairman, $3.05. This was at a max of about 150 back in 2018, and we got up to about 35 back in 2021. They sold their Bitcoin at 69,000, so I actually asked him live. I was like, why do you paper hand? And he laughed at that question. Apple at 153. Adobe, the market is this the right Adobe? Because the market is not. Wow, Adobe 291. Adobe losing another 10 billion off its market cap in one day. The market did not like them buying Figma for $20 billion. S&P opens at 385, FedEx at 161, AMD 76, ARK 42, Amazon 124. Amazon's actually green today. Meta 146, Rumble 15 from its SPAC. Meta 146. The market is still not giving Meta any love. Opendoor, there was an article that came out yesterday that said they are down 42% on the new sales of homes that they bought in August. The market is not liking Opendoor at all, down to 360 as well. Glitch Life, good morning. Stevie Stone, 75 or 100. I say 75, but honestly, we probably need 100, but it's probably 75. It's actually 8:30. Texas time is. I forgot. People in Texas have to deal with the fact that it's 8:30. Oh, interesting. I always knew California was 6:30. I forgot Texas was 8:30. Fed meeting is tomorrow. Oh, the meeting is today, but you won't hear the results tomorrow. Oh, okay. I didn't know that. What else do we got? SoFi 603. Where's DNA? Where's Ginkgo? Ginkgo 303 as well. Yeah, nothing too crazy, guys, in the pre-market. I mean, in the market open, everything's end phase, of course, is up 3016. The stock just always ends up being up. DCFC, this is a Palantir SPAC. They are, is this up? They are, well, they're not down. Snapchat, $11. It's pretty basic. All right, I want to show you guys a video around Josh, our boy Josh, talking about a market rally happening on CNBC. And this one was actually a very interesting one to take into to look at. So this is one that was that was interesting to look at last night, and I don't know if everyone caught this. So we could be lining up for a face ripper rally here. Let's look at the logic for why this would happen.
Begin, though, with our talk of the tape, whether stocks are setting up for a big rally into and out of this week's Fed meeting. Was today the start of that? Sounds crazy given how negative everyone seems to be these days. Well, one well-known CNBC contributor says it could, in fact, be the case, and the signal could be in the bond market. He is Josh Brown. He is the co-founder of Ritholtz Wealth Management, and he is on the phone. Josh, thank you so much for calling in. It was at about 2:25 or so where you sent me an email that sent the following. Blow off top for short-term yield, treasury yields, the 2-year failing at 4%, VIX barely budging higher, 10-year calling BS on the 2-year. It's saying, quote unquote, the Fed ain't getting to 425 this year. This smells like a rip your face off rally brewing into after the FOMC. What led you to believe that this was about to happen?
Thanks for having me. I was just watching the VIX fail to confirm. Like, if we were going to have rates continue to shoot straight up, that should have been accompanied by a lot more stock market volatility than what we were seeing. Like, that pair has been working all year as being coincident with each other, and the VIX just couldn't get excited today. Then you see the 2-year yields kind of flirting with 396, 397, not really pushing through, had all the reason in the world to push through, and it didn't happen. And the 10-year gets stopped at about 3.5, which doesn't mean it's going to get stopped there forever, but 3.5 is highly significant on the 10-year treasury. That was the high back in 2018 when the bond market basically told Trump his trade war wasn't working. That was an important level when the Fed pivoted in the fall of 2018, and that was where the 10-year treasury got to this June, which is when the market hit its low. So these levels are really, like, you don't have to believe in them, but enough other people do that they're important to watch. So when the VIX failed to really get going today, and you started seeing like the large cap tech names bottoming out, et cetera, you just look at this setup. This guy's going to come in on Wednesday, tell you what you already know he's going to say. Everyone is expecting hawkishness. Everyone is expecting 75 or 100 basis points. Denny's saying 100 basis points. If he delivers that, the narrative is going to change to, okay, great. So another 25 in November, another 25 in December, we're probably good. Once that narrative is seized upon, people are not long enough, and I think you could have a face ripper.
And so basically, once that narrative gets into place, which is, likely going to happen, that's where we get a face ripper. Let's listen to another minute of this, then we'll move on.
The other point is, I guess this makes the point that maybe the Fed can't be as aggressive as it sounds as though it will be, or some expect it to be. And that's why the bond market is reacting in some respects to what you just said, and then the stock market follows in turn. And by the way, I was waiting for us to settle out to see if we could actually close at 3,900 on the S&P. We're at 3,899.99. I saw just for a moment there, we did make it to 39.
All right, let's close that. Let's look at Canada inflation that just came out today. Canada CPI month over month, August actual negative 0.3% versus 0.1%. Previous estimated negative 0.1%. Canada CPI 7% versus 7.6%. So Canada CPI is down to 7%. It was expected to be 7.3%, and it was last month 7.6%. Inflation going down in Canada. It can rally after rate increase, but long term is still not enough. Yeah, I mean, long term there might be like a real crash, but nonetheless, that's what we're seeing. I think the point that Josh is making here is that if inflation gets baked into this narrative of like it's declining and it is peaked and things are getting back to normal and we're going to do 25 over 50, then there is going to be a massive rally. It's just that simple. There's going to be an absolute massive rally because people are not long term enough to feel like that there's a market crash or anything's coming. And that's where we might see something else happening. But this is interesting. This is very interesting. All right, let's look at this one and we'll talk more.
Mark, you put out a pretty concerning note over the weekend where you talked about we're in a situation where we're damned if we do, we're damned if we don't. You want to explain that?
Certainly. The Fed is raising rates very aggressively to combat inflation, which is, in my mind, one factor, but not the only factor. Raising interest rates are going to have a tremendous effect, a negative effect on corporate revenues, corporate profit. Mortgage rates are at 6.3% now for a house. It's going to have a very bad effect, in my opinion, on, as I said, corporate earnings, and also the bond markets are going to go up in yield, down in price, which is also going to have a very negative effect on savers and investors. So I think the Fed is way too focused on inflation by itself, and they need to consider what it's going to do, what these raising of interest rates is going to do to the rest of the economy, or they risk throwing us into a recession, causing bankruptcies with a lot of high yield companies, and it's going to be a very difficult time. So we're damned, as you said, Becky, both ways.
Yeah, I mean, I think about that. It puts the Fed in the position of having to choose winners and losers again, I guess. Although you could almost say the high yield companies kind of put themselves in that risky situation, thinking that these rates were never going to change. When you look at inflation, it kills every company, including small businesses that also risk going out of business because they can't keep up with labor and input costs.
Right. I think the best move the Fed could make is to say, here, we're going to raise interest rates this time. The consensus view, of course, as you just said, is 75 basis points. And then say we're not going to be raising rates again until the end of the year, first of next year. So the markets can readjust, companies can readjust, borrowing can readjust, and we don't get thrown into some kind of recession because the Fed is combating inflation and not paying attention to the rest of the corporate market.
I hear your point, and I want to dig in a little deeper to what the implications are going to be. But is this a case of the market not listening to what Jay Powell has been saying for some time? They've been saying that they're going to raise rates. Every Fed speaker I listen to basically says those rates are going to be higher than the market's anticipating. They're going to last higher for longer. If you haven't readjusted already, were you just the fool because you didn't believe the Fed?
Becky, I don't think it's just a question of not believing it. It's a question of somebody has to refinance their debt and the bonds are coming up, or if somebody's going to get a loan at the bank. You know, you can listen to what Jay Powell says, and I certainly do, but I think that the Fed has to pay attention to what their actions are going to do to the entire economy. Otherwise, we're going to risk getting thrown into a recession. And the question then is, higher inflation or a recession more damaging to the American economy? Also, it's going to raise the rates for our government's borrowing. And, you know, all across the board, there are two sides to this question. And I think that the Fed is ignoring the side of the question of what it does to the economy when they're in this rush to raise rates just to combat inflation.
Someone said, why is he wearing goggles? One of his arguments, which is really interesting, is like the interest rates we're going to have to pay on our own debt, which is a true thing. Like, we have to pay interest on our own debt. Just because the interest rates rise doesn't mean companies only suffer. Like the government, that's the same universal interest rate the government has to use as well to pay off all of our stuff, right? So it's not necessarily it can't, if it's 4% inflation and we owe however many trillions in debt, that's hundreds of billions of dollars on top of that we're paying just in interest. Like, there's not that much tax revenue. We only bring in like 4 trillion of tax revenue a year. It's just like, it's not enough. Like, it's at some point it doesn't work. Adobe falls under 290, down 2% in the market open. Spotify 98, Tesla 306. So Tesla's, out of every stock, including the S&P, Tesla is the only one that's really holding up. It's quite remarkable. They just have not faltered. Like, investors just are not letting that bad boy fall. So for those who want a Tesla cheap, like me, I mean, that's probably not happening. Uber 31. Nvidia 132, Square 62, Roku. Wow, Square is. See, this is another one. Square, Roku, and Coinbase are the picks from Kathy that I just don't like at all. TQQQ down 24. This bad boy is down. Netflix 243. Netflix again releasing their ad version, asking for a $65 CPM. It's a lot of money. But Netflix is asking for that. Tattooed Chef. This is a Jeremy stock, 565. Enphase down a little bit, 319. Google recovering a little bit, 103. GameStop is at 28. AMC, I think, is at $9. Yeah, nothing too interesting. I like Square. DNA is at 296. Thank you. I wanted to buy it again today because I'm buying it again, Chris. And why don't you like Square? Well, I think Square's now main focus is about blockchain. The camera's shaking because my legs are shaking, guys. That's the I like Square as a payment processing company, but their focus on the blockchain to me makes them more of a crypto-based company, and I don't care that much about blockchain stuff, so I don't know why I would buy it, right? Like if there was actually a bull case around payments, then maybe. What do you think of a new Palantir video? There's a new Palantir video. Let's see. Is there actually a new Palantir video? Let's see. What did Palantir put out? We'll watch it live if they put out a video. They didn't put out a new video. Unless you're talking about that interview, Joel. The interview was good. The interview wasn't bad. Did you see Netflix releasing a GameStop documentary? I'm looking forward to that. That's actually gonna be a fun documentary. I love like business documentaries that dive into stuff like that. That's it's always more interesting than not. Okay, let's see. Let's talk about housing. Let's see what's going on in the housing world. Gabriel joined Toastmasters. That's awesome, Gabe. That's super dope. Super dope. Echoes, morning, bro. What's up? When are you going to join the Meta party? Not yet, Quarantine Quartet. Like that money I kind of want to put into DNA over Meta. I'm not there yet.
Street on housing starts, Joe, expected to be around 1.45 million seasonally adjusted annualized units. Much stronger. Haven't been able to say that much with regard to housing numbers. 1,575,000. That's a really good number. Now, when you consider in the rearview mirror, June was 1,599,000. That's where we're comping to. But nonetheless, it's still a nice pop. And if we look at permits, expecting a number right around 1.6 million, a bit of a disappointment here. 1,517,000. Last month, we did get a subtle revision to the upside, but definitely permits are definitely a disappointment there. And the last time we were this close to 1.5 million, you'd have to go all the way back to August when it was 1.52. So you have to go even a little further back. We're going to go back to June, where it was 1.3 million. That's the last time we're comping to these numbers. Now, we all know mortgage rates at 6%. There's a lot of headwinds. As a matter of fact, yesterday we had the National Association of Home Builders Sentiment Index. It was down for the 9th straight month at 46. We see, as you pointed out, 10-year note yields an 11-year high. They join UK gilts at an 11-year high. The EU, the boons are at an 8.5-year high. And the big deal here is technical, because yesterday we closed above 3.48% in 10s. That was the mid-June high yield close. Finally, that part of the yield curve popped. So did boons. Same thing. They popped over their 1.77, their mid-June highs. Why is this important? It's much more of a green light now. Listen, we could all talk about the Fed, how they're in control. We could discuss whether they have a good plan, but there is something called market rates. Now, they might be still encumbered, but we have them nonetheless. And market rates have, on the long maturities, catered to some buying around the globe as investors come to look to the U.S. for best areas for capital preservation potentially, and that has kept 10-year and 7-year to some extent, the mid part of the curve, yields a bit lower. The fact that they now have popped above their mid-June high yields with all the other maturities really does send a signal that maybe the yield curve is going to continue to steepen more dramatically in the future. Joe, back.
We just got a new Palantir video. Joel just tagged me, so thank you for that. We're going to watch that together. Here we go. Let's go here.
To maintain U.S. and Western military superiority requires deliberate action and technological innovation. At Palantir, we deliver secure, innovative, and scalable software solutions at speed, accelerating decision-making to detect, deter, and defeat threats. From the global war on terror to space domain awareness and the historic Afghanistan airlift, Palantir continues to be a mission partner for the U.S. and allied nations, designing solutions that connect and strengthen existing systems, expand competitive advantage, and deliver measurable value and operational impact. Today, the U.S. Air Force leverages Palantir software to improve personnel, equipment, and training readiness. At the U.S. Space Force, Palantir serves as the data backbone for its Space Command and Control Modernization Program. Palantir's interoperable and mission-tested solutions enable organizations to adapt to evolving technological challenges, to power decision-making at the edge, in contested and disconnected environments in near real time. From Earth to space and beyond, we're delivering the software of tomorrow today. Palantir is proud to build software for strategic advantage.
Not a bad video. Not a bad video. Oh gosh, you guys in the comments. See, Echoes, this is the one thing I don't like about you. You just look at a stock and then you say it's a scummy penny stock without actually doing any research. You gotta, I mean, you spent less than 2 seconds looking at a stock and you're like, oh, it's a scam. If you think like that, I mean, okay, but I don't even think you know the first thing about what they do. And so you don't have to buy it, but if you don't know what they do, like, how do you justify? I don't know. Not even from a technical perspective, you've seen that it's almost consolidated to the point where it looks like it can't even go lower than 209, which was its last low. You haven't looked at the RSIs. You're just looking at, oh, it's under $5. It's a penny stock. Okay. I do though research, bro. Come on now. You just called it a scam and you did no research. I don't understand how. Where was the research? Got to see the research. Have you looked at the fundamentals and technicals? No one has. Chris, I also think you haven't done any research, bro. Like, you're looking at a short report and you're naturally being bearish in this market and you're like, all right, it's done. It's like, I really think this requires a lot more digging. You cannot just make these assumptions. I think there's some digging that needs to be involved. Now, you don't have to buy it. That's up to you. But the digging, when there's no digging, like, it's like, you know, Open Door, you can say, okay, based upon their buying houses and they're selling them for less than what they bought them, there could be a problem here. It's like, okay, that's research. We understand that could be a bad business. But to just say something's a scam, it's like, all right, you say so. But I said it looks like a scummy penny stock. I didn't call it a scam. Okay, but even if something, I don't know how you say something that looks like a scummy penny stock. Like, being under $5 is not scummy to me, just means like negative scam. All I'm trying to say is I spent the last 2 weeks really trying to understand this company, and I've come to my own conclusion that from a technicals perspective and from a fundamentals, there's a big opportunity there. But that's just me. I wouldn't look at it and say it's a scam immediately, you know, or scummy. SoFi under $6, $5.98. Adobe $2.93. And I'll release my video today later saying why I'm buying Ginkgo Bioworks. That'll come. I actually made a bunch of videos on it, but I haven't made a fully like introduction video to why I'm buying it. So I will make that video today. You guys will see it. NVIDIA 132. Pretty much pretty much there. Don't get upset. I'm knocking. Why would you buy a penny stock in this environment? Well, it depends on the fundamentals and the technicals. That's actually why I'm buying it at this level. Chris, if it's a scam, yeah, Chris, if it's a scam, buy puts on it. That's such a good point. If it's a scam, buy puts. If it's a fraud and they're going to go out of business, short it. Very simple. And don't say you just don't short stocks, because that's BS. If it is a scam, you should short it, because that means it's going to go under. If anyone says, how do the financials look? I bet if I look, I'll see nothing but a garbage. See, here's the other problem, Echoes. This is the worst part. This is why you can't make assumptions. They have $1.4 billion in cash and almost zero debt. That, like, this is the point. You cannot just say it's so weird to be so bearish against a company and not even know anything about it. How many companies do you know have 1.6 billion in cash ready to go that are trading at a $5 billion market cap? I mean, we just did me and Gabe did a whole fundamental analysis, price to book, price to earnings, all that stuff last night for about 30 minutes. If you want to watch that, I'm sure there's more to the story. There's a lot of other metrics that matter, but you got to understand it. Not, bro, that's not how invest markets can stay irrational longer than I can support it. Okay, but if it's a scam, if it's a Theranos, Chris, I feel like that's what we're. Wow, I just left out of nowhere. But if it's a Theranos, I was gonna say you have to, you should, it should be something you get rid of. Yeah, price to book is like 1, if I remember, right, Gabe? Price to book is literally just 1. They are losing money every quarter, though. Yes, Josh, they're a growth stock. They lose money. They're a growth stock. I mean, if we're gonna get mad about companies losing money, then like there are certain companies you invest in that you are looking at the future. You're not looking at the now. I mean, if you guys want to invest in Microsoft, go buy Microsoft, right? I'm at the age where Microsoft doesn't excite me. Nothing Microsoft does is exciting me. Maybe when I'm 35 or whatever, but I'm looking at companies that have a real possibility to 10, 20, 30x over the next 10 years. And like, you've got to take some asymmetrical bets here. You've got to take some risks. You have to make your own investment decision based upon your own calculus, your own horizon. Me putting $5,000 into DNA is well worth the $5,000. Like, it is absolutely worth the $5,000 because I see this doubling way before Microsoft doubles and becomes a $3.8 trillion company. Like, for that to happen to Microsoft, so much has to happen. It's 1.81 times 2. So, or 2.8 trillion. For them to become a $2.8 trillion company versus DNA to go to a $10 billion market cap, it's just a little different. That's all. Nothing with taking risk in a bear market better than taking risk in a bull market. I agree. I don't see why he can't be bearish without wanting to interact with the stock. There's many more stocks out there. Yeah, I mean, you can, but when you call it a fraud, it's different than bearish. Bears, their financial health is superb. I agree. Book value to shares 0.95. 0.95. Again, I'm not here to convince anybody. I'm just trying to do this with Chris in the chat because he's having fun calling it a fraud. When there's a big short report against it in 2021, they were audited for it. Everything was fine. And like, as soon as you start justifying someone saying that, everyone starts thinking scams. Like, okay, but you have to understand, activist short sellers also try to make their money. When they shorted it, they lost 20%, and the Scorpion Capital probably gained God knows how many millions that day just by releasing that report. I mean, that's just the nature of the market. That's what happens. So it is what it is at the end of the day. When there was a decent, when the people who released that stuff about Joe Rogan on Spotify, what was the thing? It was that artist who like took his music exclusive to Amazon that day after the Joe Rogan like COVID controversy stuff came out on Spotify. And one was speculating that Amazon planted that story to get something exclusive because they're competing with Spotify. I'm just saying there's a lot of crazy stuff that happens in markets, right? People start to do a lot of different things. How far below can it go from here? Well, that was what me and Gabe were talking about yesterday. 209 seems like the bottom. It really doesn't seem like it can go low because the market has capitulated at that stage. But granted, if it goes even, if the macro gets even worse, it could go lower for sure. All right, bro, your follower's getting upset. I can leave. You don't have to leave, Echoes. I'm just saying, I just called you out on calling it a scam because I just don't like when people say a company's a scam or it's scummy and they have not looked at anything about it. It's just like such a quick reaction. And it's like, Okay, but you didn't look at anything about it. Just because people short doesn't mean it's wrong. Look at you're going to compare Enron to this, Chris. That's you're pulling out a lot of examples, my guy. Enron is going to be your argument here, bro. You're calling it an Enron. I don't think you've looked at it enough, Chris, to just compare it to Enron. That's a big one. Okay, let's watch one more and then we'll be out of here. Let's see this one. Interesting.
Senior economics reporter Steve Leisman joins us now with the latest results of the CNBC Fed survey. Hey, Steve.
Good morning, Joe. Wall Street increasingly embracing the idea that the Fed is going to hike and hold at a restrictive rate rather than the old idea, which was that it would stop short and then cut quickly. The September CNBC Fed survey finding that 75 basis points is the call for this week. All of our 35 respondents, except for 2, who put it at 100, but mostly saying 75. Then that peak rate, the terminal rate, 4.26 now. And that is 40 basis points higher than the July survey. That peak rate is hit in March of 2023. Then the important question we asked this time, how long will the Fed hold there? 11 months is the number, with some saying as few as 3, some saying as many as 24. The recession risk now 52%, little changed in the next 12 months, by the way, little change from the prior survey. John Riding writes, the Fed has finally realized the seriousness of the inflation problem and has pivoted to messaging a positive real policy rate for an extended period of time. That's the important part there. So there's the trajectory. 240 right now, 238, call it. We reached near 4% by the end of this year, go up to that peak rate in March. And then you can see that there is some cuts built in. That's the result of some thinking the Fed turns tail quickly. But the average, again, thinking the Fed stays there and holds, with cuts coming perhaps into 2024. Rates stay high because the 35 respondents think that it takes a long time for the Fed to bring down inflation to its 2% target. We're 8.3 now. We go to 6.8 on the CPI by the end of the year, 3.6 by the end of 2023. It isn't until 2024, just 60% believe the Fed hits the 2% target. By the way, more than 80% of respondents did not change their inflation forecast over the next 2 years because of the Inflation Reduction Act. Along with the recession risk comes an expected rise in unemployment. Take a look here, what's expected to happen. You're at 3.7 now. Go to 3.8. Not too much damage by the end of this year, but next year, 4.4. It's still an historically low rate, but you often don't see a 1 percentage point increase from the bottom outside of a recession. While these respondents have argued over the past several months that the Fed was way behind the curve in tightening policy, many also now are concerned about the opposite, that it will go too far or further than it needs to go. Joe?
All right, Steve, we don't have enough of these, I don't think. How often do we see this, Steve? It comes very quickly, doesn't it?
The survey you're saying?
No, I look forward to the survey, these 2-day meetings where they're always important.
All right, so we're probably gonna get 75 bips. That's what's gonna happen. I'll cover everything. Obviously, that happens tomorrow. We'll see what happens. Okay, so a couple more videos coming out today. I have market close. I'll be there at 3:45. We'll have late night stock talks tonight, and I'll give in my video for why I'm buying a stock that, as Echo says, is down 71% this year. Echo's Shopify is down 77% this year. Shopify is a much bigger company. Like, everything is down. Being a bear and being bearish against everything it's very easy to do. It's finding opportunities in a bear market is when people actually make some fucking money. And they actually, everyone wants to buy Google when it's at 150 and not when it's at 101. I'm buying. This is the time to buy. And everyone can think what they want to think, but you've got to understand a little bit more. Question amid, what is the reason for continually missing earnings estimates? Everclear, they actually raised their estimates. They raised their 2022 revenue to 395 million. That was up from like 180 million that they raised. You got to listen to the earnings call from Q2. If they miss EPS, that's just EPS. They're going to miss EPS. Palantir misses EPS. A lot of companies miss EPS. Revenue and top line revenue is what I care about the most. They're not profitable yet, but revenue is and they've been raising their estimates for revenue every single quarter. And I think they're going to end the year at about $400 million in revenue, up from like 200, which is what they guided for. So they're going to have 60 new sell programs. There's a lot. You got to listen to the earnings call that happened as well. All right, man. Have a good day. Got to make more drama vids. Yeah, Echoes, you got a lot of stuff going on in the drama world. All right, guys. Thank you so much for watching. I will come out with a video a little bit more explaining. Maybe me and Chris do a DNA debate video. My decision to buy Ginkgo Bioworks. And someone asked if there's a real bricks behind me. No, these are not real bricks. These are. You guys like the new background? I added some more stuff. I added the Nintendo DS Lite. Okay, if you guys remember that, there's the Michael. And then I added some more trophies. I was like, let's make it a fun. And then there's Scruffy at the top. That's my bear I had since kindergarten. So hope you guys like that. All right, everyone. I'll see you in a couple of hours. Bye-bye. Have a great day. Thank you for joining. It means the world.